a sunset industry, peak oil consumption, and EV disruption. In this threatening landscape, only the strongest remain, and today represent the company that stands strong against these challenges. So this is OR, the ultimate survivor. Good morning, distinguished judge. Today, we invite you to join a timely investment opportunity by placing a buy on OR with a target price of 16.7 baht, presenting a 17% upside from yesterday's close. Our recommendations is supported by three-win framework. First, winner takes all. OR is dominating shifting landscape through its unrivaled one-stop ecosystem. Second, winning strategy. OR is actively monetizing its physical and digital assets to complete the perfect ecosystem. And lastly, winning against challenges. Market fears are overestimated and OR is ready for a huge turnaround. But first of all, let's take a look at OR's core engines. OR operates businesses through four main pillars. First, mobility, lifestyle, global, and innovations. While market believe OR is trapped in the sunset industry, we see it differently. We see a clear strategic direction as OR is moving to a high-value segment. This move is supported by growing coffee markets as Thailand consumption per capita remains low compared to other developed countries. But how can OR capture this demand? First, scale. With over 4,000 locations, Cafe Amazon is larger than all competitors combined. Second, its strong brand equity and back-end operations make Cafe Amazon the top choice for franchisee, allowing faster expansions with minimal capital. And finally, Cafe Amazon fully integrated supply chain creates a cost advantage that its closest competitor could not simply replicate. Beyond strategy, the stable crude oil price and the oil fund turnaround act as a buffer to limit downside risks. Internally, the pipeline activations in Northeast regions improve operational efficiency and reduce logistic costs per liters. Together, we project OR's marketing margins to expand at a sustainable range above 1 baht per liter. And finally, this visual proof why OR is the winner of this shifting landscape. While other competitors have significant gaps in their portfolio, OR has built a seamlessly integrated ecosystem, combining energy and lifestyle into one destination. But a strong foundation needs growth engines. For this leads us to the second thesis, OR's winning strategy.
The market believes that OR has a track record of underperforming investment, but we see two game-changing initiatives. First, the budget hotel. OR plans to pilot budget hotel within PDT station, supported by two key success factors. Platinum format station create a one-stop ecosystem that competitor cannot replicate. While competitor cluster in the city center, OR enter blue ocean zone along inter-provincial routes. This project unlocks a potential incremental EBITDA of 700 billion baht. Secondly, 50% of SME cannot access loan and are forced to rely on loan shark. OR enter the virtual bank market, providing financial access for unserved and underserved segments. Joining this transition by leveraging an unmatched sale of almost 100 million users, combining with AIS and Baotang, and superior risk profiling for its high-frequency data of 3.9 million daily traffic, which enable precise credit scoring. With OR holding a 20% stake, we project a potential upside of 7%. But is this growth plan achievable? Let's take a closer look. Cash adequacy ratio indicates that OR generates sufficient cash flow to fund expansion, further proven by exceptionally low DE ratio, provides ample headroom for future borrowing. On the other hand, there is an unjustified discount to OR from the market's overreaction on Cambodia conflict. However, the reality is far less severe than perceived. Despite report of 50 stations being rebranded, the actual impact was limited to just 35 stations. In addition, oil export restriction to Cambodia has been mitigated by shifting supply sourcing to Singapore and Laos. With only a 5.8% EBITDA contribution, the Cambodia segment poses limited risk, further supported by the sales volume pressure already past its peak with a much lower decline rate. Moreover, there is also an unrealized ESG premium.
OR initiated many ESG initiatives, but today we highlight three key examples based on three factors. Starting with sustainable aviation fuel. It reduces 10,000 tons of CO2 and adds an NPV value of 2.64 billion baht. Moreover, OR outperforms its peers with 12 aviation stations. Second, Thailand project. It raised an income of 565 baht per head and adding NPV of 240 million baht. Finally, governance. OR outperforms the industry with a 5-star score. And according to the Journal of Social Science, this superior oversight lowered the cost of capital by 4.66%. This implies to a 3.3% ESG premium, lifting a target price to 16.7 baht. Now, let's take a look at financial foundation. The model project a sustainable revenue CAGR of 1.57%. Operationally, efficiency is sharpening. The cash conversion cycle is tightening, unlocked by the activation of the Northeastern Pipeline and PTT Group synergies. Lastly, profitability. Margin is expanding, supported by the favorable in marketing margin and increase in lifetime contribution, positioning OR well above the industry average. Now that we all know OR is a good company, is it a good investment?
A bridge between story and numbers support a good investment. To reflect all types of shareholder, we initiate free float rate target price with 75% sum of part DCF and 25% sum of part EV per EBITDA. Let's start with sum of part DCF, resulting in value of 17.28 baht. We calculate price across three core segments and other joint venture in order to get the most realistic model. We break down revenue separately for each segment, product, and geographical area. In multi-segment, we break down each oil product independently. For example, E20 is derived from each component of the price structure by run negation on ex-refinery price and marketing margin. We also run negation on market volume sale multiplied with market share based on SWOT analysis and our analysis supported by team survey. The new section sale is driven by management guidance and expansion plan. We use bottom-up data resulting in different discount rate, and the terminal goal rate is assumed to be 2% aligned with Thailand long-term inflation rate. To support this, our sensitivity analysis shows that there's still much room until we change the recommendation. We use sum of part EV per EBITDA multiple to get a relative price of 14.80 baht. To support this, the technical approach is used to mitigate the lack of perfect peer and confirm the stock is underpriced. Moreover, the stock is trading below historical average, showing the stock signal to buy. After weighing both valuation, we get a target price of 16.7 baht per share.
To assess the risk in the good story, we ran stress tests, but we'll focus on two key factors. First, OR is exposed to the movement of global crude oil price, which is translated to the cost. However, we see that the marketing margins will need to fall by at least 17% in order for us to change our recommendation. To reduce this impact, OR is shifting to their lifestyle segment, which reduces reliance on the volatile oil income. Second, a faster than expected EV adoption would cause the demand for gasoline to rapidly decline. Despite this, we see that the gasoline sales volume will need to drastically reduce in order for us to change our recommendation. On top of this, by having the largest EV charging network in the country, OR is positioned to gain value from this transition rather than just being disrupted by it. The other factors were also considered, and the worst outcomes for each one were simultaneously modeled to achieve a bear case of just 12%, compared to a bull case of 29%. To round off our analysis, we ran 10,000 simulations and achieved an 81.3% probability of a buy recommendation. With strong fundamentals, we issue a buy recommendation with a target price of 16.7 baht. Ladies and gentlemen, in a disruptive and volatile industry, we present to you the ultimate winner. Thank you. The floor is open for Q&A.
I can start first. Yeah, I'm quite intrigued by your winner takes all arguments. That sounds like a platform company to me. How could that happen? And just common sense, right? If this is a winner takes all story, why the upside is only 17.6? Have you considered in terms of the barriers to entry? I think the petrol station, it does cost some capex, but not that much, right? So is winner takes all story really that value? That's my question. And when you do the projections or the asset monetization strategies, for example, budget, hotel, virtual bank, etc., what financial evidences are you used to incorporate to your financial projections? And at the budget hotels, I don't think PTT is a pioneer, right? I think PT is the one who pioneered. Correct me if I'm wrong, but I understand that PT is the one that pioneered the budget hotel. So obviously the barriers to entry is not that high either, right? So what financial evidence and what makes you so convinced that this is going to be the case? Or just two questions for me. Feel free to answer this.
Okay, so thank you for your question. So to answer your first question about the winners takes all, we focus on our mode ecosystem like the F&B service, cafe, maison, and the EV station plus. So we didn't focus on our oil station. And the second one is our growth plan, the budget hotel and the virtual bank. So our strategy is try to get out of the oil industry. So, and the last one is the Cambodia conflict. So we talked about the Cambodia conflict.
So to clarify my colleagues, so winner takes all. We see that the market size of number of stations is declining, but the branded player is increasing. And the fact that OR is moving to a high value segment, such as non-oil portfolio, and if you can see from this ecosystem ratio, OR has a complete ratio compared to other competitors. And also, so in turns, if one visitor enters the stations, we see that OR has a high chance to have a cross-selling and create synergy in the stations with its non-oil portfolio. And my colleague will further explain about the budget hotel and virtual bank.
To answer your second question, the budget hotel. As you said that PT pioneered this project. The PT is the PT Max Camp is different customer segment. The PT Max Camp is around 200 to 300 baht per night, a small room for the truck driver. However, the budget hotel, we target the leisure traveler and also the commercial segment. Target at around the price per room at around 700 to 900 baht per night. And you said that how do we incorporate in our valuation, right? So the company already announced the number of hotels, the number of rooms, and the average price per room. And with that information, we can calculate the revenue of the budget hotel. And we assume the occupancy rate at the conservative and gradually growing to the industry average of occupancy rate of 72%. And that is not only the revenue that we get, we also calculate the revenue from the synergy that people staying in the PTT station. For example, the ticket size per head for one customer is around 125 baht. We can multiply that with the people per year that we estimate. And to
appreciate that. So numbers, committees have questions, so for the entire time. I understand your thinking now. Thank you.
Okay, so on my question is on your target price, right? Give me one biggest risk for this target price and how much would be the impact of that target price?
Thank you for your question. So we ran a sensitivity analysis on our key valuation drivers, and we identified that the marketing margins is the most impactful variable, where a 1% change in the marketing margins would cause a negative 0.11 Thai baht change in our target price.
And what would be the factor that impacts that margin?
So the marketing margin is incorporated many factors, such as the exchange, the crude oil price, which is directly correlated with the ex refinery cost, which is the first section of the marketing margin, and also the exchange rate in Thai baht per US dollar, because the crude oil price is denoted in US dollar. If the Thai baht were to appreciate, then the ex refinery cost of the marketing margin.
So pretty much it's subject to the volatility of the oil price,
Yes.
Yeah.
Not just the oil price.
but the FX.
However, we have Thailand has the oil fund which subsidize the price and control the retail cap price and also the margins of oil retailers. And the fact that the oil field fund is turned around to be a surplus balance. So we think that this the marketing margins of oil will expand at a sustainable rate.
Okay.
And can you go to
That's okay. Thank you very much.
Thank you. Could you explain a bit more of the digital assets about the data monetization? What's the opportunity here for OR? And regarding Cambodia, how much do you see the absolute worst case be? How much investment there is at risk for OR?
So, thank you for your question. Since OR entered the virtual bank market, it unlocked the data monetization of the company. Right now, the company has a high frequency data of 3.9 million daily traffic, which gives them a high transaction data, and those data can translate into the precise credit scoring to give loan for unserved and underserved segment. And with OR using the strength of its high frequency data, it can translate their data into the new scale. And for your second question, the Cambodia conflict, we have tried to delete the Cambodia segment out of our base case model, and the results show only a negative 2% upside below our upside, the previous upside, and we still have a buy recommendation if we delete the
On top of my colleague, we believe that the Cambodian segment poses very limited risk. As you can see, when we excluded the entire Cambodian segment from our forecast, the target price only decreased by around 2%.
So global price account for 0.7 baht per share to OR's total value.
To add on my colleague about the asset monetization of budget hotel. So mostly OR try to open the budget hotel in the Platinum Station, which is the biggest size of that station, which there are a free space to open the budget hotel and add the ticket size to the station.
Go back to the data monetization and innovation. How did you incorporate those into your project?
Thank you for your question. In virtual bank, we use visual income model. Since virtual bank is a financial firm and in the startup stage and have generated not yet generated a positive NPV for the first year, and the result is around 7% upside potential.
To clarify my colleague, the model is used to because the project doesn't generate positive cash flow in the first years, but will generate positive cash flows in the future.
And how much in share price will you contribute to your base case?
Quite low, 5 baht.
It has the incremental fund price 0.5 baht per share, which result in a 7% upside.
When you mentioned on ESG factor, you said it could reduce the discount rate by some in order to get.
So thank you for your question. So it can incorporate 3.3% of ESG premium. So the CT adjust rate in terms of ESG